What is the one metric you're actually going to look at this afternoon?
For me, it's revenue growth. I think this company is trying to direct investors to focus on gross billings growth, which is sort of the total transaction value that runs on the platform. But what's been interesting is that over the last 5-6 quarters, there's been a really wide divergence between the rate at which gross billings is growing and how much of that is falling down to revenue. That's really the main focus for us. I think longer-term investors will probably focus and prioritize gross billings growth as a measure of market share and Uber's ability to kind of withstand competitive pressure over time and kind of build this really large business. But we'd like to see the revenue trends a little better than they've been.
And you're not expecting them to be any better?
Well, as Deirdre mentioned, the first quarter kind of unaudited range in the S1, it looks like Uber Eats revenue is kind of rebounding a little bit, but ride-sharing adjusted net revenue is still decelerating. So very hard to say, and that's a big reason why we've got a neutral on the stock.
Where do you land?
I'll take the other side of that.
Okay.
Which is, the revenue is what it is, but the loss rate, they were running at a rate of losing $3 billion a year before they gave us the first quarter in the S1, and now it's up to $4 billion. So you just can't lose that many billions that often and be a sustainable company. So I think that, it's going to be difficult for them to control their pricing, but it is possible for them to control their discounting, and that's the key to profitability. We're not going to get any surprises. Any surprises on earnings today are bad, right? And the stock has sort of found its level. It opened at 42, tried to rally up to 45, couldn't get there, and it has a middling score, and usually middling scores kind of stay where they are until the lockups. So we think it'll be sort of stable, but in the longer term, next quarter, the quarter after that, profitability rather than revenue growth is what we're looking at.
And what are you looking at long term for the stock price?
I mean, it's sort of, if you don't get going, in the right direction right away, like where you open, which for these guys was 42, not 45. It tried to find a level at 45 and couldn't. So I think, we were talking before, if you're at like 53, the question is, does it get there in 12 months? Which is where everyone thought it would trade to, like on day one.
Maybe the bigger question is if you're not going to see any discounting from here in terms of pricing, can they continue to grow?
So, that's the question, right? Like, do you discount and take share at a loss? Or do you get rational and grow off a rational, profitable base?
What's more important?
I think for longer-term investors, they'd say that market share is the most important, and I do think that's the way that this management team is leading. One point on sort of the share price trajectory over the next 12 months, I think it's important for folks to realize that in the back half of this year, comps on revenue get a heck of a lot easier, particularly for Uber Eats. So, for example, last year, Uber Eats entered 2018 growing their net revenues over 400%. They exited the year growing 11%.
But you think profit is not the most important thing?
At the moment,
expecting that for a very long time?
I don't know about a very long time, but for the next quarter, maybe two, I think it's going to be revenue trends that carry the day.
But you sound very bearish.
No, I think that we've had a model running on this company for over 3 years, and what the model says is it works in great weather. Like when the competitors are all blowing headwind on each other, then the unit economics go upside down and nothing makes sense. So for us, when we see rational units, then it's just how many units will they do?
Well, now that Lyft and Uber are both public, will that help? Now that they both have to answer to investors.
If you listen to the body language from Dara, he's saying that their long-term assumption is that the competitors will be rational. Right, which means not forcing losses on all of the participants all over the world.
In other words,
all the
getting
time.
the cartel with us quickly. Nobody lower prices anymore.
I'm still getting discounts on my phone.
Isn't that amazing? So me too.
Religiously, Uber and Lyft.
Yep. So they're still fighting for share. So they're inside of your construct right now, which is share is what people are going to be looking at rather than profitability. We'll see if that changes. Because again, if you're losing $4 billion a year, you cannot keep this up forever.
Right. Especially not when you have to show the public markets every quarter.
Correct.
How much you're subsidized.
Now, that's another thing that'll be interesting, right? Lyft decided to show less, right? They don't disclose the units anymore, for example. Like,
do you think that's the right decision?
Absolutely not, right?
Yeah,
it's impossible to do.
Does not exactly build investor confidence.
Yeah, why would they hide that ball?
Right.
And so that's one of the other things we're looking for other than the results for Uber, because we kind of know the broad outlines of what the results will be, but they get to set the tone for what the disclosure is going to be going forward. And if they do what Lyft did and sort of dial back the numbers that they show investors, I think that will be a very worrisome sign.
One little tidbit on the competitive environment, at least in the U.S., we're maybe starting to see signs that things are rationalizing a bit. You mentioned the emails that you're getting, and a lot of investors I talked to in the tri-state area are also getting similar emails. But, Lyft on their last earnings call did talk about evidence or signs that incentives for attracting riders are starting to moderate, which we think, that I think could be a result of the fact that both these companies are public, and that could start to help create an environment where they can start to approach profitability.
Right. When do you think, I mean, how much are you going to focus, by the way, on Uber Eats? I was going to ask.
Yeah, I was going to.
Massively. Yeah, very important. Obviously, fastest growing part of the business. The fact that it's a multi-product platform is a big part of why Uber wants to get a premium multiple versus Uber. So Uber Eats is very important.
And what about the implementation or development of subscription products? Do you think that's coming? In a meaningful way?
Yeah, I think it is. I think it's something that they're going to invest in. I think it's small today, not necessarily a needle mover, but again, one of those ways that they can kind of smooth out the business and get
create loyalty.
Yeah,
I mean, that's the other piece of it.
So the way the model works on this is if they can compete with each other to attract customers who will then be sticky rather than compete with each other for every individual ride, it's better for everybody.
Right.